All right. All right. Hey guys, welcome to this week's podcast episode. And today's episode is a sponsored segment by Equity Multiple. And we're really delighted to have the CEO, Charles Clinton, on the show. And he's going to talk to us all about Equity Multiple, what they do, their founding, their products and services. And for the audience out there, how you can potentially use Equity Multiple, how they can benefit you. A lot of the audience and our listeners are doctors. So Charles, welcome.
Thanks, Chris. Excited to be on. Really appreciate the opportunity, and thanks for everyone listening out there.
Yeah, and we really appreciate your sponsor and your support. So, talk about your journey to Equity Multiple. You're the CEO now, and we'll dive right into the conversation, which is going to be about investing and real estate and all of that.
Yeah, absolutely. I mean, one of the things about partnering with you guys, about what resonated for your message of financial empowerment, is very much my own story. I grew up single mom, no investments, really had no idea what the world of investing was growing up. So all something I kind of came to over the course of my 20s and 30s. I went to law school, a few years out of college. Thought I was going to be a lawyer. That's the only thing I really had exposure to as a professional path. And I worked in the real estate group at a big white shoe law firm, mostly working for the big private equity funds, Blackstone, KKR, Carlyle, really all the giants. And I realized I wasn't on the side of the house I wanted to be on. I wanted to be the one working on the deals, working on the investments, not working on the papering part of it. No insult intended to any lawyers listening, of course. And started Equity Multiple back in 2015. And Equity Multiple is really, built out of the Jobs Act, which had come a couple years earlier, which basically lets you put all sorts of investments online, generally accessible, that didn't used to be the case. For a long time, real estate and other alternatives, really the province of people who, one, institutional investors, or two, are, buying properties themselves, doing all the work themselves. But the idea of, property as an investment class was something that was really hard to access. So some laws changed over 10 years ago now, and Equity Multiple was really born out of this idea that we can take this whole world of property investing that institutions are doing all the time and put it online, kind of shed the light of the internet on it, and open it up to individual investors who might not have the opportunity to invest in real estate before.
Yeah. Yeah, it's a very interesting and there's a lot of groups trying to democratize access to, a lot of the institutions that can have access, and a lot of it's like commercial real estate. And one of the questions, from the audience is what is this? Is this a syndication? What types of real estate does Equity Multiple really focus on? Is it commercial? Is it multifamily apartments? Kind of delve into that area.
Yeah, absolutely. So at its core, it's a type of syndication. So basically, syndication, of course, has gone on for a very, very long time. But a lot of it is kind of country club style, right? It's someone directly or indirectly. That's the way the market really existed. And what Equity Multiple tries to do is, take that and really make it into a business, right? Apply standard operating procedures, vet all the investments that, people come, they need money. We have a team of, mostly former kind of private equity people who structure the investments, vet the investments, really do the heavy lifting up front to decide, hey, is this worth my time as an investor to consider this, right? We're looking at 20 investments or so on average for every one that we're putting up onto our platform. In terms of the types of investments available, so first, I guess I'll start on property types. So, we have really offered over our 10-year history, just every type of major property you can think of. So, industrial, multifamily, retail, office, some smaller subtypes like car washes and data centers. Really, we've kind of trafficked all over the real estate map. That will expand or contract depending on where we are in the market and what our reading of where the best place to invest today is. So, right now we're heavily focused on industrial and multifamily. Those are the places that we feel like big picture, macroeconomic wise, it makes the most sense. It has the most, kind of 5 or 10 year positive growth story to it. And then within that, we also offer investments in both real estate debt and in real estate equity. So that's where it might go a little bit different than just a typical syndicator. So we will offer individual equity ownership, buy a share of a deal for as little as $5,000 or $10,000, but we also offer the chance to be part of a real estate lender. And today, with interest rates so high, being a real estate lender is a pretty interesting and attractive thing.
Yeah. Yeah. Especially when today's interest rate environment. And, I've been following Powell's comments, just about, we're interested in like inflation and jobs and all of that. It sounds like you're focused more on some of the better performing real estate assets, which we'll get into a little bit later, your thoughts. So the question is like, for the types of clients that are interested, they're hearing this, oh, okay, I could potentially partner with EquityMultiple, kind of talk about minimums, accredited investor status, kind of rules, regulations, how to, onboard if you're potentially interested.
Yeah, absolutely. So right now we're only open to accredited investors. You go to our website, equitymultiple.com, you set up an account, very simple, takes 5 minutes. But basically it's similar to setting up an online brokerage account, right? So you're doing everything you need so that once you decide what you want to invest in, everything's kind of click, click, click and done. So you'll come to a main page in our site that'll basically have the investment opportunities we have available at any given time. So that might be individual properties for equity ownership. It might be individual real estate loans. We also have some portfolios and funds available too. So, for investors who don't want to make those individual property decisions, they can, give the money to us and have it more diversified right away. And then the minimum investment, that varies depending on the investment. So you'll basically see that attached to any individual investment. Our lowest minimums are around 5,000, more typical are probably around 15,000.
Yeah, it sounds like very, I've heard minimums like 25, sometimes, 50K, which is interesting. The
Yeah,
other,
we really try to keep them as low as we can. And some of that honestly was regulatory. We had to solve things to figure out how to take more investors into each investment. But, what we always encourage is diversify, right? So the lower we can keep minimums, the more people can diversify their dollars.
Yeah. And you mentioned regulation, and I was just curious about the impact of regulatory changes affecting the landscape of real estate crowdfunding, online investing. What are some of the challenges, opportunities that EquityMultiple's faced with these changes?
Well, look, you can imagine as a former attorney, I have always been very cognizant of the regulatory landscape. I think for a while that it was a little bit of the Wild West in terms of how people were operating, above or below board. We've tried to operate in a regulated way throughout our entire existence. So we actually are a registered investment advisor ourselves. So the regulation looks kind of like any sort of institutional investor. It's just part of our operating procedure and process. And obviously we hope investors take some comfort in that. I think there undoubtedly are folks who have not operated that way or are getting squeezed as the industry gets bigger and bigger, and the compliance eyeballs get more and more. But we've always made that a real priority.
Yeah, it's always like, in business, I always talk about, compliance, regulation, cross your T's, dot your I's, and for physicians, it's always patient safety number one. Which brings us to, especially today's technological landscape and with AI, how's EquityMultiple leveraging technology to scale? Like, what are some of the innovative tools and strategies, platforms you're using to enhance the UI, UX, the outcomes, and the overall feel of the product?
Yeah, that's a great question. So, our platform, the platform you interact with, we built it all ourselves, but we use a huge range of third-party tools. So what's interesting is, as AI proliferates, right, all these things that we already have built into their platform, into our platform, are getting loaded with AI capabilities that, we didn't have to do anything to create, right? So, that might be as simple as things like chatbots and stuff getting more sophisticated. Being able to get those kind of quick, easy answers faster. Right now, it's no replacement for a person. We always have people on the other end to answer questions, talk to people live. But it's something for setting up an account and guiding through that stuff that's really efficient. A lot of what we're deploying right now is really like back end stuff, right? So how do we take this process that used to take 5 people 4 days? How can we turn that around in 3 hours? Because we can at least get drafts of things done really immediately through AI. On the real estate evaluation side, we haven't found a tool we really love there yet. What we do is we take a bunch of proprietary data. Some of it's from third-party proprietary, some of it's in-house, and we use that to algorithmically score markets for each property type. So, we have a list of our in-house view on the top 50 multifamily markets in the country, the top 50 industrial markets in the country. And then we'll go out and hunt for opportunities in those. So, right now we have 2 industrial properties available in Orlando. And people might think, oh, why 2 that are both in Orlando at the same time? But that's just because we said, hey, this is the number 3 market in the country for industrial on our list. Let's go out and be proactive and find opportunities there.
Yeah, which and I have a follow-up question is I'm just always trying to see how CEOs are thinking, and how do you see the intersection of technology and real estate evolving in the next 5 to 10 years? I'm just seeing if you're I'm just trying to get a vision type of response.
Yeah, absolutely. I mean, real estate and technology have had a very troubled history with each other. It's I would, even more than traditional finance, it's basically very, very, very resistant to change, right? It's a super capital intensive business. And you have basically a lot of people who are at this point very old, who have accumulated a lot of power and wealth within real estate, right? So that means the machinations of change are rather slow. But you also have always a new generation pushing that are trying to think how we can incorporate, how we can make this more efficient. So you're starting to see like this big delta between like the old school owner and the new school owner, right? One on the other hand, who's looking at not just their management of the property and how to make that more efficient through technology, but also the building itself, right? Like building services, how can we reduce costs through technology? How can we supplement energy? How can we reduce, basically it comes down to just reducing costs, right? And on the investment side, I think that's going to get incredibly interesting, right? I think that, private market data is notoriously hard to use and synthesize. But I think as some of these investment analysis tools start to get bigger and bigger and have more users, the amount of data they're going to be able to pull in and their predictive power is going to be pretty transformative.
Yeah, I love that's one of the thing is after AI, it's data and analytics, and I've heard analogies of analytics and data are going to be like oil or electricity, for these platforms. And this is so kind of moving on is your ideas, given the current economic climate, and I had other podcast guests, they involved in multifamily, and they said, kind of, they're quoting kind of sometimes like 3 to 5% cap rate, which is not, traditionally, you get 10% or more. So what trends are you observing in real estate markets, particularly like commercial, office, especially with work from remote work? And how is Equity Multiple positioning itself and its investors to take advantage of these trends?
Yeah, I mean, I think the last 2 years have been a brutally awful time for commercial real estate, but I think we're starting to enter the exciting time. Things can only stay at the bottom for so long. And I think that after a certain period, what you tend to see, right? First, you have, sellers are rushing to try to sell while buyers still think prices haven't changed, right? It kind of goes on for 6 months. And then you have a period where sellers want to sell, but they want to they want to get the old price and the buyer wants to get the new price. And then no one's buying or selling, right? And that's basically, where we've been for a year plus. If you look at the public brokerage data, we had Marcus and Millichap, one of the big corporate brokerages. They do more transactions than any other brokerage in the country. Their transaction volume's down over 50% from where it was in 2021. So what you're starting to see now with kind of rates stabilizing, if not going down yet, is capitulation, right? Sellers are like, I can't hold out any longer. My loan is maturing. The value isn't going to be what I hoped it was from a couple years ago. And that's what creates opportunity, right? Is, when things start actually selling for reduced values of, 10, 20% cheaper than they were a year or two ago. That's where we get really excited about what's starting to happen right now. In terms of individual properties, it's all over the map, right? We have a hard line, basically against office, certainly from an equity perspective. Office vacancy has soared across the country. And right now, I think no one knows how much an office building's worth as a result. My personal belief is, we're not going to stay as out of office as we were. People are already in the office more than they used to be. I mean, doctors are obviously still never left the office, but for us information workers, and I think it's strong labor markets have kept people out of the office more too. If the labor market takes a dip, I think people come back into the office, and I suspect that it settles somewhere, not where it was, but not where it is now. But right now we're not taking any bets in office. We just view it as the risk reward isn't right yet. In terms of multifamily and industrial, we've seen cap rates just start to move up. And that's where the excitement comes. Stuff that would have been a 4% cap rate is a 6% cap rate. And especially buying now when you can look out into the future and say, in 3 years, 5 years, interest rates almost definitely will be lower than they are today. That means that you'll have good refinance opportunities. You'll be selling into an environment where cap rates might be lower. I think that's what generates a lot of excitement for us.
Yeah. Yeah, and as also a follow-up to your response, which was really valuable to the audience, is are there any particular niches that you mentioned multifamily and industrial, and I've heard recently data centers, like retirement homes, is EquityMultiple looking at those, or just kind of other real estate niches that are kind of up and coming?
Yeah, it's a great question. In terms of data centers, those are basically we love them, but they're so capital intensive that market is just really dominated by institutional capital. I mean, now you have people are literally building billion-dollar plus construction cost data centers. So that market is really, I think, kind of, just moved to a size that's hard to participate in. For assisted living and that kind of thing, I think the demographic trends really support it. We have done some. I think the challenges there are it's very operationally intensive. It's the most operationally intensive type of real estate, right? If you think like an industrial property with triple net leases, you might only have to talk to your tenant really once every few years versus you're running an on the ground business. I mean, doctors know, right? I mean, it's no joke, right? So you really, really have to be careful there because something that looks good on paper can go south pretty quickly. What we like in industrial, this is a bit of a niche within industrial, is small bay industrial. So, not looking for big floor plates, mega users, but really stuff that is focused in like 5 to 30,000 square feet per tenant. We just think the demand there has been incredibly strong. As the economy continues to be more and more reliant on local distribution, and I think with the possibility of, more onshoring of manufacturing over the next 5 or 10 years, there's just, a lot to like for not just big businesses, but all the range of smaller businesses that are required to support this stuff, for whether it's regional distribution, local distribution, or kind of light manufacturing capability.
Yeah, interesting. I know we're coming close to the end of the conversation. And one thing that was always told to me is real estate is a people, it's a relationship business. So, what does Equity Multiple do to educate and engage its investors? How can people contact you, reach out to you, and to understand more about Equity Multiple, what it does, and potentially work with you?
Yeah, absolutely. Great question. I mean, I think as you know, as much as we are a website-oriented business, it's just people behind there, right? So, we have a team of folks on the we call investor relations, who are standing by all the time to answer your questions, just get to know you. That question can be as, how do I log in? Or it can be, help me understand this investment. We also have a huge range of educational materials on our website. Also, if you sign up, we'll put you into a email flow where you basically get, kind of sign up educational materials, right? Like understand the basics of real estate investing, understand the difference between debt and equity, understand cap rates. We want our investors to, be empowered to make investment decisions themselves, to understand real estate. And honestly, look, real estate, everyone kind of gets it, right? I mean, we're all interact with buildings all the time. It's not that complicated, right? It's usually rent and expenses. So a lot of it comes down to jargon, right? And people can feel like the jargon is a barrier to entry. But once you get past that, I think everyone who's a doctor is smart enough to understand real estate. Trust me, I work with real estate people all the time.
Yeah, I love that. And so, and yeah, I love that. And for all the audience out there, let's let's for a fantastic conversation. Let's thank Charles, and be sure to check out Equity Multiple. These links and resources will be in the show notes. Give their socials a like and follow. And thanks so much for sponsoring the show and coming onto the podcast.
Yeah, absolutely, Chris. Really appreciate you having me on, and thanks for everyone who listens.